Hi everyone, good morning and welcome to today's morning report with me, Richard Perry, Markets Analyst at Tech Markets on Thursday the 21st of August. The European markets have started a little bit flat, actually not too bad either way really. There's a little bit of consolidation that's happened in these markets, and that's just come off the back of a hawkish set of Fed meeting minutes last night that took a little bit of edge off the Wall Street session last night, just around about 0.3% higher on the S&P 500, just underneath that all-time high again at 1991. So it still seems as though that the bullishness is still there in the market, but just a little bit of edge being taken off the gains yesterday. Asian markets overnight also a little bit mixed. Bit of range of data actually. The Chinese flash PMI disappointed actually, fell to a 3-month low on the HSBC flash PMI there, and that helped to drag most of the Asian markets lower, but the Nikkei was strongly higher. Actually, and that was helped by a very weak yen that we've been seeing in the last few days, but also the Japanese PMI data was slightly better than expected as well. So a bit of differences in the Asian markets, but certainly the European trading session a little bit flat, nothing major. Probably markets are now looking towards this Jackson Hole meeting and the Janet Yellen speech that's due tomorrow afternoon at 3 o'clock. But in terms of the dollar, it remains very strong, and that's been driven again by those Fed meeting minutes, and it continues to make significant gains. Just a slight bit of consolidation today. And that has been also helped by the fact that the Eurozone PMIs have come out just this morning. The flash PMIs for France. France was disappointing, but Germany came in slightly ahead of expectations, and that has added a bit of support to the euro in early European trading. But certainly at the moment, the dollar generally remains very strong as we approach this Jackson Hole meeting. In terms of stock markets, well, the VIX continues to fall away as the volatility declines and markets settle down, and certainly that has been helped by the geopolitical tensions in Ukraine beginning to ease somewhat. In terms of our data that we're looking out for today, we're looking now towards this UK set of retail sales data. Retail sales in the UK are forecast to come back down slightly from last month at around about 3.5, 3.4 is the expectation according to Reuters, but certainly anything above the 3% there would still be very strong on a historic basis. And then into the afternoon, we're looking at the US jobless claims, and again an improvement is expected there, down to 303,000 from last week's 311, and again you can see this big downtrend that we're seeing, and 303 would be just back towards a decent level once again. Anything under 300,000 is certainly would certainly be considered strong for the markets. Anyway, my chart of the day is the Aussie dollar, and Aussie dollar has had in the last few days a bit of a disappointing fall away, and certainly you can see in the last couple of months there's a series of lower highs in place, and we saw on Tuesday a bearish key one-day reversal, which finished this little rally that we saw, and that peaked out at 9345. But it looks like the Aussie dollar is under a bit of pressure in over the course of the past few days. Although intraday today, just in the past few minutes, actually, the Aussie dollar has jumped back towards that resistance that I'll show you here on this intraday chart. The resistance comes in around about that 92.80 mark, and maybe this is a chance to sell. In fact, in the last few minutes, because I still see that. The daily chart would certainly suggest that there's further weakness, probably another retest of that 92.36, and even I think ultimately, if you're looking at the momentum indicators, which just suggest a bearish bias within this range trade, I still think that there is further weakness in this move, and a test of 9200 could well be seen. Not necessarily calling a breakdown, but I still think that there is further room for a bit of a bearish drift back towards the supports within this range before maybe you'll see a bounce. But certainly, I think that there is weakness towards that 92.36 reaction low that we saw early August. Anyway, so I wish you good luck in your trading today, and I will speak to you later. Thank you.